What's up, guys? This is another video. This is about indicators. Indicators are mathematical tools used by traders to measure the potential of a trade, to predict a trade. Okay, they are used in addition to other technical analysis tools to actually tell them, as in kind of a confluence, add as confluence to their trades. Okay, so there are four types of indicators. Okay, the trend indicators, the oscillator indicators, the volume indicators, and the volatility indicators. The trend indicators are indicators such as the moving average and the rest, used to measure the strength of the trend, used to measure to check the actual trend. Just like an example is the moving average, which is the one you're seeing on my screen. There are three lines on my screen. These lines are called the what? Moving average. There are three different periods of moving averages. We'll be going into that shortly. Okay, so that is one. This is to show you the trend, that the market is trending what? Upwards. Okay, next is the oscillators. Oscillators are used to measure the overbought and oversold conditions of a market, of a non-trending market. Okay, whenever the market is ranging like this, okay, ranging like this, and of course you don't really know what the market is actually doing, or you don't know how to really enter this market, you use oscillator indicators to measure the overbought and oversold levels. Okay, that is basically what oscillators are for. Okay, next is the volumes. Volume indicator tells you the volume, the amount of money, tells you how strong a particular buy trade will be. Okay, if institutions are into the market, okay, that's what volumes are. Okay, volumes are um are triggered by the forces of what? Demand and supply. This is where the actual liquidity lies in the market. We'll be going to that. Then the next is the volatility indicators. These volatility indicators are used to measure the volatility of the market. We shall be talking about few indicators out of all of this. Okay, so going forward, okay, we shall be checking these indicators out. So looking on your screen, I'm circling something right here, up here. Okay, you click on this N button, you click on it, it will take you to where indicators are. All right, so looking here under my main chart, we have about three moving average indicators, the one you saw on my chart. Okay, um to add in more indicators, or to add an indicator, you click on this F plus right here. Click on the F plus. There are indicators here, the trend indicators, like I said, and these are the indicators under the trend. They are the average directional movement index, the Bollinger Bands, envelopes, Ichimoku, the moving average, the parabolic star, standard deviation, and the rest. These are mathematical tools. Okay, these are mathematical tools used to measure the trend. Okay, the next are the oscillators, being the average true range, the bearish power, bullish power, commodity channel index, the marker, Forex index, MACD, momentum, moving average of oscillator, relative strength index, relative vigor index, stochastic oscillator, Williams percentage range. Then under the volumes, we have accumulation, distribution, money flow index, unbalanced volumes, and then under the Bill Williams, we have the accelerator, oscillator, alligator, awesome oscillator, fractals, and Gator oscillator, market facilitation index. Okay, you don't have to have all of these things on your chart, because you, my friend, will not be comfortable seeing all of those things on your chart. It will look like a distraction. Okay, so you need to have a few amongst others, or let's say one or two indicators on your chart to determine and depending on what you actually want. If you want to check the strength of the if you want to check the strength of the trend, or let's say if you want to and check the overbought or oversold conditions, you use the example of such things you use are the relative strength index and stochastic oscillator. And then if you want to check the trend, if the trend is trending up or down, if it's an uptrend or downtrend, you use the trend indicators being moving average and Ichimoku and stuff like that. Okay. While if you want to check, the volume of trades, you use the volume. Okay. And then if you want to check um the fractals, okay, if you want to check the places where price reacted to stuff like support, resistance, you use the fractal indicators, like all these indicators right here. You use indicators in this section. All right, so let's start with the moving average. We'll be talking about a few indicators. Let's start with the moving average. Okay, to add an indicator, you click on whichever indicator you want to add. Okay, for instance, this moving average, you click on moving average. All right, click on moving average and you start editing parameters to suit your interest or your taste. Okay, let's go back to the one on my screen because I wouldn't want to edit it back again. Okay, this is the one on my screen. Okay, so I'll be opening it for you to check the parameters of my own moving average. Then from there you can screenshot it and edit it on your own chart. All right, so I'll click on the first one here, which is the 13 period moving average. Okay, the period is 13, the shift is 0, method is exponential, apply to close, style is 1 pixel. Just screenshot it and save. All right, next is the 21 period. Period is 21, shift is 0, method simple, apply to close, style 1 pixel. Then the color is purple. Sorry, the first one's color was purple, this one's color is orange. Right, click on save. Next. Okay, the period is 50, the shift is 0, method is simple, apply to close, style is 1 pixel, the color is blue. Save. All right, so we go back to my chart. As you can see, these are the indicators. How do you trade this? How do you use this how is this moving average traded or used? Okay, this is how it is used. Whenever the price, right, whenever the moving average is below the price level, you will look for buy entries. Whenever the moving average is above the price or the chart, whenever it is above it like this, you look for sell. Right, you look for sell entries. Right, but make sure that the market is actually trending upwards. Make sure the market is actually trending upwards or downwards. Okay, in this case the market has been trending upward for some time. Are you seeing it? Higher highs and higher lows, higher highs and higher lows, just like this. Then the moving average is following suit. All right, the moving average is following suit like this. So you look for buy entries whenever the moving average is below the price, not above the price. If the moving average is above the price, you look for sell entries. Of course, you look for sell entries only in downtrends and buy entries only in an uptrend. That's the rule. All right, if you backtest it very well, you see that here the moving average is trailing below the price and buy entries were made. Then going back, you see where when the market was trending bearish, right, doing lower highs and lower lows like this, lower highs, lower lows, lower highs, lower lows, like that, like that, like that. The moving average was on top of the price, right? So sell entries were made. So that's how you trade the moving average. That's how you use the moving average as a confluence to your trade, your analysis. All right, so next on our list we'll go to add indicator. We check the next one that we'll be talking about. The next one that we'll be talking about is the relative strength index. This relative strength index is only added to your indicator window. Right, you click on this relative strength index Click on it and look at the parameters, right? The period is 20, apply to close 1 pixel, and the color is black. Click on save, right? So it's appearing under the indicator window. Look at the indicator window. All right, we go back to our chart and you see that the chart has changed. All right, chart has changed. Okay, it now has two windows, the main chart window and the indicator window. All right, so that's basically how this relative strength index appears on your chart, right? So how do you trade this relative strength? This relative strength index is used to measure the relative strength of the chart, the price, right? So if you can see, it appears almost like the chart but looks like a line chart. Okay, look, whenever there is a support, the relative strength index is used to measure the strength of the support, if it's actually a support. Okay, then whenever there is a resistance, it's used to measure resistance, just like that. Okay, so you look for sell entries when this relative strength index gets to this number, this around the 80 level, this is the 80 level. As you can see, there is 80 on my screen. There is where there is 80 and there is where there is 90. Whenever whenever this RSI gets to, this relative strength index gets to this 80 level, you look for selling opportunities on your chart, right? Whenever it gets to the 20 level, you look for what? Buy entries. Look for buy entries on your chart, right? That shows that the market is at the over sold level. This is the oversold level and this is the overbought level, right? This oversold means the market has oversold and it's ready to buy, right? The overbought level means the market has overbought and it's ready to sell, right? That's basically what it means. Okay, so that's that for relative strength index. Moving forward, we shall be adding, let's remove this relative strength index. Talk about the next one. Let's add the next one being the stochastic oscillator. This one, stochastic oscillator, right? You click on it. It's just like the, you can screenshot this settings and you see set it on your own chart, right? Click on save and let's see what it looks like. It also appears under the indicator window, right? We go back to our chart and see what it looks like. Look at it. Look at what this oscillator looks like. This stochastic oscillator looks like. All right, so it's almost the same thing with the relative strength index. Whenever price gets to the 80 level, you look for sell opportunities, and at the 20 level you look for what? Buy opportunities, right? So this is the oversold level, this is the overbought level. All right, so you look for buys. Are you seeing it? When price got here, the oscillator got here and then the buys were made, right? The same thing here. When price got here, the oscillator got here and then the market was sold, right? So that is how you trade the stochastic oscillator, right? So moving forward, let's talk about the next one. I don't want this video to be lengthy. All right, we go to the next one being the fractals, right? We'll talk about fractals. This is fractals, right? Click on fractals. You see, look at the settings. Okay, just 2 pixels and that's all. Just click on save. All right, save, and then you see, if you can check this chart very well, there are tiny little dots. In fact, let me go and increase the pixel. Let me increase it to 4 pixels, save, and go back to my chart. Are you seeing it? It's more clearer, right? So as you can see, the fractals appears at places where price reacted and changed their behaviors. How do I mean? Okay, look at here. price was doing a little bit of down movement, and then all of a sudden it started was moving upward. So each of these swing points are what we call fractals. Each of these tiny bitty of swing points are called what? Fractals. They are places where price reacted to. All right. So they are more like they're more like support and resistance levels. So that is basically what fractals is all about. All right, I hope you get it and I hope you understand. If there is any question you don't understand, please leave it in the comments. I'm going to attend to it. All right, this will be the end of this tutorial.